Good evening, everybody. This is the Elliott Wave update for the S&P 500 for Sunday, October 17th, 2021. The markets are beginning higher as we start Globex here on Sunday afternoon. And the S&P is, of course, a little bit higher. Right now, it's only $3.25 higher. But we're very close to that no-break level that I've called at 44.72. And that's where the market would violate an Elliott rule that this would be considered a minor wave 2 correction, right? There's minor 1, so minor wave 2 correction. Well, it cannot exceed the price territory or where the beginning of minor wave 1 began. And that's at 44.72. If it breaks above there, well, then it's not a wave 2 correcting a wave 1. It's exceeding wave 1. So, but I'm sitting on what I think could be a top. But now I'm just going to relate it to market sentiment and other things that are going on at the same time. We are walking into third quarter earnings. And what we have coming up, we've got Apple, we've got Amazon, we've got Chipotle, we've got PayPal, Facebook, Google, Intel, Microsoft, NVIDIA, Netflix, Tesla, etc. We've got all these titans of tech coming to report earnings. Do I expect this market to start to really move substantially lower while we await those earnings? Not until we hear from one of them. If one of the bigger tech companies disappoints or doesn't have forward guidance that pleases everybody, whatever the situation might be, and it starts heading things lower, well, that's going to be a different situation. But right now, this is all the unknown. So I think the bias remains to the upside. They will rule in, or they will err in favor of buying versus selling. So having said that, that doesn't mean we won't correct. So at best, if we're finishing what I'm labeling, right? Wave C consists of 5 waves. Here's wave 1 of C, wave 2 of C. Now I've labeled this as wave 3 of C and this point as wave 4 of C. So in other words, wave 3 of C completed at 4,449. Wave 4 of C completed at 4,436. That puts us in wave 5. That projects higher. And we're sitting right below that 472 level, 4,472 level. And we've gotten up to 469.50 tonight, in the start of Globex. So we're right below that thing. So for me, I have to consider that it's going to break. But sitting right above it, I have where wave C would be equal in length to wave A, which is a common point at 4,478. Okay, so am I going to allow six S&P points when I'm staring in the face of a much larger correction? I don't know. I don't know. It depends on when they do it and how, if they stop there or how close they get to it. So there's still a lot of the unknown, but I must be honest and conclude or say that if it does get up there and break, it's going to depend on what the structure looks like. It's going to depend on a lot to be able to say, okay, well, I'm going to allow it because I really see that this concluded that move. If not, then, as I've said, this becomes a C wave. So this becomes A, B, and C. And of what degree I will work out, but that's the point. So then what we're really dealing with is an A, a B, and a C wave up, but it's still going to possibly form an irregular. But it allows that B wave in its entirety to go above that level and not worry. And in fact, it could break to a new all-time high above 45.49. So it can get above 45.50, let's say, and still be corrective. So, but right now, we'd have to change it, and this would have to be a an ABC for an A wave on a little bit larger degree. And now this is the B wave of that little bit larger degree. But a B wave can go irregular. So in other words, it can go and break above that high and still come crashing down. But let's not get in front of ourselves. This market, again, what I would have to do is I could pull that 3 up to here, that this is just completing 3 of C. And then we get a 4 and then a 5. Or I take this, got to take this down. You know, it just really depends on what the market is going to tell us. But right now, if I had to label this a 5, this market would have to drop. If I'm not labeling it a 5, then I would expect additional rallies. And because we're just entering into additional earnings, which just began last Thursday, then there's a lot of hesitation to start taking this market lower right now. So unless it's jerked lower by some something that comes out in the news or some number or something that just truly throws everything else behind, then yeah, I could see that the market was going to hold and continue to trade off of what they hear in the news. Okay, so we do have resistance at 44.72 to 44.78. Above that level, we then get to 45.15. So really between this 44.80, I don't find too much because we have to go too far left. We're starting to break. So if I go out onto my 4-hour chart, I likely will come up with some additional levels. So, well, this isn't going to get to agree with me. There you go. So above that, we have additional resistance, price resistance at 44.78, which is right there. And that actually goes with the previous, well, several 4s ago. And then I have additional resistance at 45.09, and we have it at 45.15. Then I have it at 45.29. Then I have it at 45.48, and then ultimately right there. So 45.48, you know, here. 45.39, the next one is new highs. Then we're looking at 45.77, 45.91, and on and on. So we're back to actually having to include potential for a run to the 4,600 level and still be corrective. I mean, people can call this whatever they want. In my mind, it is not bullish. In my mind, this may seem bullish, but it's a B wave. So you can be as bullish as you want. And yes, it'll be very tradable to the upside if it starts to break. So don't get me wrong, but I'm not looking for this thing to just keep sailing and sailing and sailing and sailing because of whatever. That I'm not. I do not put fundamentals or the news. The news is going to cause the move, but I'm just looking at straight Fibonacci and structure. Is that possible? 46.38? Yes, it is possible. Am I going to look for it? If it should occur and we start breaking, yeah, I will. But right now, this is where we are. We got all this in front of us. So the market's got to do the proving, not me. But I'm just telling you, these are the levels. That's based on Fibonacci, and those are based on relationships sitting here. We can change this so that all of this fits. But right now, I'm just dealing with this move. And so for tomorrow, we're going to see where we end up. If this is going to be a 3, we just get a 4, and it doesn't start to break below 44.42. We then, these levels have been broken, so they now become support. Those are going to help. I'm on a 4-hour chart. The 200 sits at 4,400 basically. Let me drop that down to the hourly, and let's take another look. The 200 sits at 43.81. So we basically have it from 4,400 down to 43.81 of the 200s on the 4-hour and the 1-hour. That's going to provide a support zone for sure. But a break will start to really build a very much stronger picture. The earnings, done, who cares? they're breaking. And then I really would be looking for a low below 43.17. Now, what could go against that is we have seen a nice increase in volatility. And so that volatility should play to both sides. At the moment, the buy volatility has not really flipped. We're seeing some of it, here, but they're quick, and then it's replaced, and it's quick, and it's replaced. And then we get that follow through. It's quick, but it's replaced. It's quick, but it's get to replace. The same thing had happened here, and it goes and zips right beyond all of this. But breaking down, if it shifts, then the volatility to the downside will continue to produce good upside moves. But as it starts to break here, then also it's basically telling us the intraday trend has changed. And now we're the sellers are back in control. And that's all that I'm going to be looking at. Okay, I've got to leave it there because I don't want this to go on forever, although I could talk forever. So tomorrow, we have to follow what the market tells us. We have our moving averages, continue to use them. You can take them down all the way to your very near-term charts, continue to use them. Let me take a quick review. As we're sitting here, we see these are still very lined up to go up. They're now just now in the 30-minute breaking below the 30-minute 8. We have the 30-minute 20 at 43.58. Now, and then the 50 at 43. So we still, again, 30-minute to the hourly, yeah, about the same place. So we're still sitting pretty good in terms of, I don't think we're going to really start to collapse. Let me go down to the 15-minute. That also, but we now just broke below the 20 and we grabbed it back and we're sitting right at it basically right now. Both are starting to turn a little bit lower. So we have 44.55 next up on a 15-minute basis. And then we have 43, et cetera, et cetera. So you can follow these and then you're just able to trade and you're able to take it down to this level and trade it. This is looking pretty good. On a 5-minute chart, yeah, this is worth a sell. We started to break below those moving averages. Yep, I'll sell it there. Look what you get. It goes from 64, goes down to 62. It's a $2 move. Okay, if you're a trader, would you trade it? Sure, why not? And we're getting follow through. So that's my point. Let's trade it. Let's not worry about who's right, who's wrong. Nobody. We're letting the market tell us what it wants to do and then trading it. I'm leaving it there. The next update is Monday, the 18th.